If you are an LLC owner, one of the biggest questions you have is how to pay yourself correctly. Whether you are a new LLC owner or whether you are an existing LLC owner, this video is going to give you the proper information to make sure you're paying yourself correctly and legally and you're not violating any IRS rules. But before we jump in, I'm gonna need you to like, comment, and subscribe so you don't miss out on any of this wealth building information. Now, let's get after it. How are LLCs taxed? When you are a single member LLC, you are taxed by filing a Schedule C inside of your individual 1040 tax return. You would do a sole proprietor form, taking all of your income and expenses on that particular form. If you are a multi-member LLC, you're gonna file a Form 1065 with all the other members, and each one of you will receive a K-1 form for your fair share of income or loss. And if you're an LLC and elected to be taxed as an S-Corporation, you're gonna file the Form 1120S, and each member is going to receive a K-1 form. There are two ways to take money out of your LLC. The first way is to take a draw. That means that you're going to take money directly out of your bank account, either by check or transfer into your individual account. The second way to take money out of your LLC is if you are taxed as an S corporation, you're gonna take a salary and you're gonna take a distribution of your profits. Not draws, but distribution. When you're paying yourself, which entity saves you the most money? The LLC is an entity that is going to be subject to self-employment tax on your net profit, the 15.3% on top of income tax, on top of federal and state income tax. The S corporation will require you to take a reasonable salary for which you're gonna pay self-employment tax or Medicare and Social Security tax, and only the remainder is going to be hit with federal and state income tax. So as a rule of thumb, typically the S corporation is going to give you the lower overall tax bill. The best way to pay yourself, if you are making $50K or less, you want to stay inside of your LLC, be taxed as an LLC, and just take your draws. If you start to exceed $50,000, you may want to elect S-Corp status, take a reasonable salary, and then take distributions. Either way, make sure you understand the tax implications and understand all the taxes that are involved. So let's recap. When you are an LLC owner, you've now learned that there are 3 ways that you can be taxed. You've also learned that you can take money out of your LLC and how to do it, whether you're an LLC or whether you are an S corporation. You also now know the threshold of $50,000 or less or $50,000 or more to decide between an LLC or an S corporation. Either way, you want to make sure that you are following the right legal process so you do not get yourself in an IRS slinky. And now that you know better, my friends, I'm going to need you to like, comment, share this video, and subscribe so you don't miss out on any wealth building information. Now, go get after it.